This is how I use ASR or Advanced Self-Review in order to improve my trading results every single week. Alright guys, so as mentioned, I'm going to be going through in this video how I use Advanced Self-Review or ASR for short in order to improve my trading results, and how I use this at the end of every single week in order to review my trading performance. You see a lot of people that they're very good at journaling their trades, but they don't ever actually go back and review the trades and perform some sort of analysis of them. So without doing that, the journaling is technically useless because you're not actually putting in any steps or any processes that you can use in order to move forward from the mistakes that you've noticed in your journaling, or even acting on things that you've done well, that you've journaled. So that's basically the purpose of an advanced self-review. Is basically to review how you did in the moment when you were placing trades, or when perhaps you didn't place a trade because of some sort of psychological mistake. And the purpose of this is to help you eradicate some of those commonly occurring trading mistakes that you might be making, and then hence improve your trading results in the end. So first of all, what is advanced self-review? Advanced self-review is basically an introspective process, meaning that you are looking, you're reviewing yourself, what your psychology was like at the time, what your internal mental thoughts and processes were like, and also obviously how you did in terms of technicals. Did you follow your trading plan, etc.? So it's an introspective process where you review your performance in terms of technical analysis and psychology. So did the trade fit your plan? If not, why did you enter against your plan? And I would definitely write this down, is what I do. And how did you feel before, during, and after the trade? So before the trade, was there any fear involved? Did you perhaps see a very clean setup that fit your plan perfectly, but maybe you didn't enter because you had previously been on a losing streak, and then because of that put you off entering the trade, and then that trade would have made back all of the previous losses plus more, for example. That's happened to me quite a few times. Did you get out of the trade early, and did you micromanage the trade? For example, if your plan tells you that you will hold until a 1 to 3, not take any profits and not make break even, but then during the trade perhaps you got scared of a loss, price came back to break even, and you closed the trade later then hit take profit, and then you get angry at yourself for that, and it's sort of like this whole negative repeating cycle that occurs because of the mental processes behind that. So these are the sort of things that during ASR we analyze and incrementally improve at over time as well. So how and when do you actually do this? So for me personally, this is at the end of every trading week on Friday evening. However, obviously you can do this on a Saturday or a Sunday as well. I wouldn't wait though. Probably I would say that the sooner you do this after the trading week, the better, because everything is fresh in your mind. For example, if you leave it until Sunday morning, you may have forgotten how you felt during a particular trade, which is important, as we will discuss in a moment. So ideally you would do this as soon as the trading week ends, whether that be Friday in New York session, because I know a lot of you guys don't trade New York session on Fridays. So perhaps after your London session on a Friday, you could do it then, or a Friday evening is equally as good, or even Saturday morning. Doesn't really matter. Just make sure everything is fresh in your mind when you are doing this. I would set up a Google Doc as well, or any blank document. It could even be a notepad or a journal. If you want to do it by hand, obviously then you can't include the screenshots of the trades. So I would definitely do this digitally on a Google Doc or something of a similar nature. And these are the things that we are going to be included, and this is how I personally structure the advanced self-review. Obviously, if you feel necessary, adapt this to your own trading style and your own personality, depending on what you want to review and what you want to maybe work on in your trading. So number one, obviously we're going to include the number of trades taken and the total gain slash loss for that particular trading week. And this basically includes that under all of, so actually we'll discuss this first. So number 2, we also are including any missed trades. And then under all of these missed trades or actual trades that we did take, we're going to be including a technical and a psychological review. So the technical part, that's fairly easy. We write down in terms of technical analysis, why did we take this trade? Did it fit the trading plan? And if not, then we move on to psychology. Why did we take this trade if it was against our plan? If the trade did fit our plan and we executed perfectly, we also include this in the psychological performance, but obviously then there's nothing negative to add. I'm always very overcritical with how I analyze my own performance. So even if the trading week was perfect, I executed all of the trades that materialized according to my trading plan, I will still include some sort of psychological analysis or things that I could work on. For example, last week I took a winning trade on gold. It was 4%. But at the time during the trade, I was feeling like a little bit anxious that I might hit stop loss. So these are the sort of things that you would note down. For example, I felt fearful of another loss. And then you can kind of go into more depth about why you had those feelings. Perhaps it was some external pressures or things like that. Just we're trying to get to the root cause of particular psychological errors and feelings. So just to extend on that and to elaborate, let's say we enter a trade, we're feeling anxious that it might lose. And the reason we're feeling anxious that it might lose is because we're too attached to money and we have a bad relationship with money itself. So then you could obviously go away and work on your relationship with money by doing things such as learning to detach from monetary values and seeing things in percentages, for example, but obviously this could be anything. And 4, we simply, at the end of the ASR, we review how we did and any lessons that we can take away and apply to the following week or following months. So yeah, that's basically how I do the ASR. So now we'll go over to an example of how this actually works in practice. So you guys can see this is my weekly review document on Google Docs. And as mentioned, the first thing that we always do, or the thing that I always do during this advanced self-review, is I record the number of trades that I took during that particular week. So in this case, it was 1 trade for a total of positive 4%. And then I would record the trades that I took. So on this one, you can see that we've got screenshots of the trade on multiple time frames, the risk to reward, and underneath we have the technical and psychological review. So for this trade, technically it was very basic. We had price was in this clear bullish order flow on the 15-minute after coming from a higher time frame demand down here. We then engineered some liquidity above an area of 15-minute demand. I saw that price was reacting from that 15-minute demand, and also that we had broken this supply area to the left. Price then engineered liquidity in the form of this higher low above an imbalanced area of demand, which was also the demand which took over this supply to the left. So I entered with a limit on this zone and targeted the previous high. This high here was also a news wick, which has a high probability of getting taken out rather than price reacting from it, as you guys can see here. So yeah, that's what I would do technically. After coming to daily demand, price clearly flipped bullish on the 1 hour, and we had some clear bullish order flow out of that zone. On the 15-minute, price created some equal lows above demand, which was my point of interest. After coming to the point of interest, price gave us that confirmation entry and failed supply. We then induced the 30-minute demand that caused the structure break. So that was just a brief summary of this particular trade. Obviously, this will depend on your strategy. So for some of you guys that don't trade the same as me, this may just be a bunch of waffle and you might not understand it. That's completely fine. This bit is kind of irrelevant. It's the process that matters. So even if you trade like with indicators, you would just record why you took the trade here. For example, the RSI was overbought or oversold and we had a MACD crossover, whatever it may be, just record it here in the technical section. And then more importantly, we then review how we perform psychologically at the time. So for me on this particular trade, this was the one where I was feeling a little bit anxious about losing. At the time I had some external pressures going on and that's most likely the reason for it. So this is the sort of thing that I would write. After I came back from the shop, I was shopping at the time, price had tapped into my limit, and at first I slightly panicked and said in my head that if price doesn't hold this demand, I would close. However, it's important to note, so a little bit of context on this. In my trading plan, it says to hold to the take profit and never make trades break even, with the exception of high impact news, which in this case we didn't have. So it was irrational for me to have this thought in my mind because I know that my trading plan says never to close the trade unless it hits stop loss or take profit. So this was irrational since it was a valid trade and stop loss was placed logically. However, during the trade, I was feeling quite anxious that it might be a loss instead of detaching from the outcome, as we know that as traders, we are playing a probabilities game and therefore the outcome of each individual trade is irrelevant in the series, because we know that if we have an edge, we are profitable only over a series of trades rather than on each individual trade. So if we see this as the point of view of a casino and the people that own the casinos, they know that if one individual goes into the casino and plays one particular game, then that person may win that game. But if 100 people play that game 1,000 different times, then they have a mathematical edge over that large sample size. And that's how we've kind of got to view our trading. And then underneath, I've kind of gone into more detail about why I think that I was feeling this way. And I've said here, this might have been caused by the fact that I was watching the trade on the lower time frame after entering instead of setting limits at the stop loss and the take profit. So then, as for the lesson, I've implemented something new into my trading plan, which is to find a mental strategy for when I'm in the trades. For example, to monitor for 15 minutes and then after that, just set an alert at the stop loss and the take profit. Because for my particular strategy, I don't micromanage the trades and I don't make break even. So it's literally stop loss or take profit. So logically, I can just set an alert at the stop loss or the take profit, as there's literally zero reason to watch the trade. And then as mentioned, the second thing I like to do with these weekly reviews is to record all of the missed trades that fit my plan and I could have entered. And then any reasons for why I missed these particular trades. So for example, on this one, GBP USD, there was a nice 1 to 5 at the beginning of the week, but on my broker, this wick down happened at market open. So obviously I would have been taking that, but it was a valid trade regardless. It just happened at the wrong time. You guys can see this weird looking candle here. That's because it was market open where the spreads widen by a large amount. So it's quite likely that even if I had set a limit at this zone, then price wouldn't have tagged me in because of the huge spreads at the time. And trading market open is just pretty stupid anyway, in my opinion. So yeah, but then as with the trades that I actually did take, I would record the technicals. So you guys can read that if you want, but basically it's the same strategy as before. And then psychology, in this case, there was nothing to report because, as I said, the trade happened at the market open. So market open in the UK is at 11 p.m. on a Sunday, so I don't trade that time as it's Asia session, so there's literally no point. I'll go for a better example. Here's a GBP USD 1 to 8 trade that I missed. And first of all, the logic behind this trade was that price was printing this clean order flow on the 15-minute. We were clearly bullish and heading back to these previous highs. Price had no reason to reverse where it was currently at, and we had just tapped into higher time frame demand to the left. Price had broken past multiple areas of 15-minute structure and taken out these lower highs as well with all of this momentum. Price then pulled back into this blue zone, which was a 15-minute area of imbalanced demand. And then on the 3-minute time frame, we swept this floor of liquidity into that area of demand, broke past multiple levels of these 3-minute downtrend in structure, giving us an indication that the pullback of the 15-minute trend is over, and therefore price is heading back to these 4 equal highs just here, which gave us further confidence that price was likely to head higher. As you guys can see, we had sort of like 4 taps of this area, so obviously that has a high probability of being taken out. I also saw that we had created this clear area of demand, which was imbalanced. We had induced it with this liquidity, and it took out supply to the left, and we had that liquidity above, so this was a high probability setup. And just below, this was the technicals that I just discussed. But as for the psychology, I've said this at the start of the day, my bias was buys, and I was originally waiting for a pullback to my initial zone, which was this zone right at the bottom, because on my broker it hadn't been tapped. So I was originally anticipating price to pull back into this zone. And then I've basically said I didn't react to possible buys, so I missed this trade, meaning that once price was here, I didn't react to the fact that we were unlikely to pull back to this region, and I should have identified this one as the new zone. However, because I didn't react and adapt to what the price was doing at the time, I missed the trade. And also said here as well that someone in the Discord group that I'm in was looking at sell positions from this supply to the left, which I then started to consider after we had a sweep of this liquidity, which threw me off the trade and caused me not to take it. So yeah, this is basically the blueprint of how I do the weekly review and the advanced self review. It's basically just rinse and repeat of this. Any missed trades that you have or any trades that you did take, we review them technically and psychologically, and then below we also include a lesson from that, or anything that we could have learned from our mistakes, or equally anything that we could have learned from what we did well. And the final step that I mentioned was at the end of the review, we simply summarize the week. So this stands for what went well. Analysis was good, remained patient and waited for perfect setups, managed psychology well, executed the plan, avoided unnecessary risk on a CPI trade. This stands for even better if. So don't overthink the trades and develop a mental management strategy while in trades to avoid anxiety in the trade. So yeah, that is pretty much everything that you need to know in order to carry out a in-depth review of all of your trades at the end of every single week. And I would highly encourage that you guys do this. It has been a huge game changer for myself, and I know it will help a lot of you guys out as well. If you are a profitable trader and you feel like you've reached a plateau, or if you are an unprofitable trader and you don't know what steps to take in order to reach profitability, this is one of them, and this will move you 10 steps closer to that goal. So I would highly encourage you to do this. If you guys manage to watch and make it this far into the video, make sure to like and subscribe, and I will see you guys in the next video.